Eliminate these financial dangers. In this episode, I'm going to address tax increases, inflation, and market volatility coming. So beware, and I'm going to show you how to make yourself immune from those three dangers that cause most Americans, especially in retirement, to outlive their money. How sad is that? I don't want you to be one of them. So, my name's Doug Andrew, and I've been a financial strategist, a retirement planning specialist for more than 4.5 decades. And I have discovered that most retirees outlive their money because of three major dangers. And so I've spent a lot of my career helping people eliminate those dangers on their hard-earned money, especially at retirement. And I'm going to show you the opportunities that you can seize in order to do this. So when we understand taxes can take their impact on your hard-earned dollars to where if you have $1 million nest egg and if you were earning 10%, you theoretically should be able to pull out $100,000 a year, right? Well, if you pull out $100,000 out of $1 million nest egg and you have to pay tax because it's a tax-deferred IRA or 401k, between federal and state tax, because 41 out of 50 states has a state tax, you might only net $70,000 or $67,000 to buy gas and groceries. People go, well, we'll just tighten our belt and we'll try to get by on about $5,000 a month. Well, what happens when we have government spending, and the government is spending money right now that they don't have by like double to triple? We have government raising taxes and printing money. That causes inflation. So retirees get hurt on a fixed income because pretty soon 60 or 70,000 only buys half of what it used to. In other words, you're going to need double that to buy the same gallons of gas, loaves of bread, prescriptions, golf green fees in about 7 to 10 years, because inflation is going to be between 7 to 10% or more because of the printing of money. So what happens is we have inflation, cutting the purchasing power of your dollar in half, or in other words, the cost of living is doubling. You're going to need twice as much money every 7 to 10 years. And every time you pull out 100,000, you're only netting 60 or 70,000. So pretty soon you go, I need 100,000 net. In a 33% tax bracket, you have to pull out 150,000, pay tax of a third, 50 to net 100. $1 million nest egg, even if it's earning 10%, will be gone, drained dry in 11 years. So I want to empower you on how you can take out $100,000 a year out of $1 million nest egg, and it's tax-free. You're immune from that. And if inflation goes to 10, you'll be earning 15. So you will actually be earning 150,000 on $1 million. And this is using an instrument called the laser fund. So let's review these, because this is what I call the tax and inflation power curve. Now, before I go into these dangers and the opportunities that you ought to seize, if this is intriguing you as I continue to educate you, be sure and share with a friend who needs to hear this. Click like, make a comment, but most importantly, subscribe. And when you subscribe to Three Dimensional Wealth, this channel, click the little bell, you'll be notified every time I post an in-depth answer to a financial question, which I do almost on a daily basis on this channel. And then at the end of this episode, I want to give you a free gift, a copy of my most recent best-selling book. It retails for $20, but I'll pay for the book. You just contribute an amount towards the shipping and handling, okay? So here's the three dangers. Rising taxes. If you can't see the writing on the wall, taxes are going to be going through the roof. Under the Biden administration, we're seeing income taxes, capital gain taxes, estate and inheritance taxes, corporate taxes, all kinds of tax. This will affect everyone. I have episodes on this channel that prove that point. So we have taxes going up. That erodes away people's purchasing powers, I've indicated. We also have inflation because the government's been printing money like crazy. And when you do that, that causes inflation. And when they start charging corporations 33% more in tax, That means they're going to have to raise the cost of goods and services and so forth. Inflation is going to be very serious and probably double digit in the very near future. So that's the second danger. The third is market volatility. Because when you print money and you raise taxes, and especially you hurt corporations, all of a sudden they have to lay off people. We head into a recession, the markets start to whipsaw, and we have market volatility. Those are the three biggest dangers that really hurt people in retirement to where they cannot get predictable income. This is why the financial services industry came out with a 4% rule. Because of market volatility, they cannot assure people who have money in IRAs and 401ks in the market, they will not outlive their money unless they only pay you out 4%. That means on $1 million nest egg, they only want you to take out $40,000 a year? How pathetic is that? You pull out $40,000, you pay tax even at 25%, $10,000, you're only netting 3% on your money. Most of these money managers are charging 1% in fees on the million. That's another $10,000. If you took out taxes and fees, you're only netting 2% or 20 grand. Even if you just say, well, I'm netting 3%. Folks, my favorite instrument, which I call the laser fund, I've earned average rates of return of 9.62% for over 40 years. How much more is 9 than 3? Don't say 6. It's 3 times as much money. $1 million nest egg, I can get $90,000 a year of tax-free income versus $30,000 of IRA 401k net after-tax income. 300% more. We eliminate these dangers. How do we do this? With these dangers of taxes, inflation, and market volatility, we eliminate these by using max-funded indexed universal life insurance. Here's why. You have 3 great opportunities. The laser fund, the max-funded indexed universal life, allows you to accumulate your money totally tax-free. And when you take money out, you create income, it's tax-free. You can learn why and how in the book that I'm going to gift you. You link your returns to the things that inflate. I don't like inflation any more than you do, but it doesn't hurt me. If inflation goes to 10, I earn 15. If it goes to 15, I earn 20. Back in the 1980s, when inflation was double digit at 10, I was earning 15.5% on my universal life policies. Folks, you link your returns to the things that inflate, the goods and services that go up in price. That's called indexing, but when the market goes down, you don't lose, which is the third thing. It's called indexing for safety. You participate when the market goes up. You do not lose when the market goes down because your money is not at risk in the market. It's safely tucked in an insurance company, and you're allowing them to link your returns to an index by taking the interest on your money and allocating that to a options budget. And that's how they can afford to pay you 8%, 12%. We've had clients earn as much as 25% and even 61.33% in 1 year. From March of 2020 to March of 2021, people actually locked in gains of 61.33% net using indexing, okay? So folks, the greatest is liquidity. See, the laser fund, you have the ability to access your money with an electronic funds transfer or phone call. You have safety of principal so that when the markets go down, which they do, you don't lose. And any year that you make money, that becomes newly protected principal. I don't want to lose money that I've made in the past in the future when the market goes down. Most advisors don't know how to do that. And then you want to earn a predictable rate of return in that, 6, 7, 8, 9, 10% range, tax-free. Some years you'll earn way more than that. But on the average, I have episodes on this very channel that show actual statements from clients, numerous ones, where they averaged over 10%. Now, I can't guarantee that, but it's been the actual results because of indexing and rebalancing. And you can learn what that is in those episodes. This is Liquidity Safety Rate of Return. It spells an acronym, LSRR. And so I just created an extended acronym, Liquid Assets Safely Earning Returns. That's why I call my favorite vehicle the Laser Fund. So how can you learn more about this and empower yourself? I'll show you how you can claim your free copy. I've been so blessed to have written 11 books. Actually, a 12th book is about to be released. But book number 11 has been flying off of our warehouse shelves. It's our 8th printing, 3rd edition. It's called The Laser Fund. And I'm sending out about 1,000 of these a week. Now, it's actually 2 books in one, 300 pages, but 200 pages is for the left brain thinker, learner. This has all kinds of charts and graphs and explanations, but if you learn better by stories, you flip it over and read this one. This is 100 pages, 12 chapters with all kinds of stories and examples of people who have eliminated the dangers of taxes, inflation, and market volatility by doing what? Switching to tax-free in the Laser Fund, and being able to have safety of principle. And when the markets whipsaw, you don't lose. And you are able to have liquidity, safety, and predictable rates of return. Those are the 4 pillars that are on this book. This is the L, liquidity, safety, rate of return, and tax benefits. And we actually score investments on a scale of 1 to 10. The Laser Fund scores between 32 and 35. Nothing else comes close to it. Most places where people have their money only score about 18 to 22 points out of a possible 40. You'll understand that scoring system when you read this book. So go to laserfund, L-A-S-E-R, fund.com, click on the link, and you contribute a nominal amount towards the shipping and handling, and I'll cover the rest of that, and I'll pay for the book and fire out a copy to you. There's options there if you like to listen and learn and watch and learn, and then I can point you to financial specialists who understand how to develop and design this correctly and fund it properly to benefit you the most, to be able to create and diversify and have that foundation for a tax-free retirement.